Well, it's happening. Didi's being delisted. All right, jumping right into it. In the first press release since July, Didi comes out and basically says that they are planning to undertake the necessary procedures and file the relevant applications for the delisting of the company's ADS shares from the New York Stock Exchange, while ensuring the ADSs will be convertible to freely tradable shares of the company on another internationally recognized stock exchange at the election of the ADS holder. The company will organize a shareholders meeting to vote on the above matter at an appropriate time in the future, following necessary procedures. The board also authorized the company to pursue a listing of Class A ordinary shares on the main board of the Hong Kong Stock Exchange. All right, to dive a little bit more into the matter, an article by Bloomberg, Didi is aiming to file for the Hong Kong listing around March, people with knowledge of the matter said, and they asked to not be identified. All right, so the question really is, what does this mean for the Didi stock? Well, first off, the share price is more than likely going to crater quite substantially. Will it go to zero? More than likely not. Didi still has some value. These shares can be transferred to another stock exchange. However, the implications of what that means is the type of investors that can go into those different stock exchanges will be limited by regulation. Institutions could be limited, and that will cause institutions to be forced to sell out of the New York Stock Exchange listing, causing the share price to drop immediately in the short term. Now, I did say previously, and we saw in another article that said Didi possibly may go private. It looks like they're not going to go that route. So when they said that they might buy back their shares at $14 a share, that's not going to happen. It appears based through this, it looks like they're just going to transfer those shares to other listings, and that will prevent them from having to basically buy those shares back or avoid any legal ramifications. Now, they still have those existing lawsuits that came out, and those will probably continue to go through the litigation. But again, if you're just an ordinary shareholder and not an institution, more than likely you're not going to get any ramification for that back. So that's really not it really doesn't mean much for the average investor. So this is really bad news for Didi investors. This is going to cause the stock price to drop almost immediately when market opens tomorrow. So you may want to try to get in an order in pre-market or pretty early in the morning if you plan to get out before it drops substantially. You may miss it altogether. So at this point, you're pretty much going to be caught holding the bag if you still own Didi. That's my opinion. I don't expect there to be any fluctuation to the upside based off the information I have today. Now, if anything comes out saying that they may go private, that could cause the stock price to go back up. But more than likely right now, we're just going to see this continue to go into a downtrend. And if you like this type of content, please consider subscribing. I do videos on personal finance, investing, and stock analysis. My name is Frank Finance.